What's up, everybody? I'm going to show you guys how I sell options on Robinhood. So this is what I do for my full-time job, and it's very, very simple, not overly complicated. Anybody can do this, but I will give a disclaimer that you need to be doing the ultimate research on whatever company that you want to buy. That's what I've always done whenever I sell options. Like, I'm not going to just sell options on GameStop or some company that there's a lot of FOMO going on, like fear of missing out. So I'm only doing companies that are going to be around for a very long time, that have a very good debt to income ratio, a lot of cash on the side, recession proof companies, right? So, for example, I just did one with Palantir. As you can come up here to see the plays, this is the one I did. I recommend doing 45 days till expiration, but I've been doing it weekly just because I feel like it's a little bit more fun for me, and I can better hit my targeted goals doing that. So, if I'm not selling options, I'm buying leap calls. But I would say 95% of my trades are selling options. So this is what I do. Palantir, bring up my handy dandy chart. Now, you don't even really need this chart, but if you want to get really dialed in, like, 10, 15% more for whatever trade you want to do, you can look at these charts. Sorry, I have narcolepsy. That's why I'm freaking on so much. So you got the Bollinger Band, which is these blue lines. The bottom predicting about one standard deviation below what the stock would go to. Middle is like the average. Top is the high the stock will go. That's following the pink line right here, which is the 50-day moving average. And the bottom is 14 days, and it's called the Resistance Support Index, RSI chart. So the top is the resistance, the bottom is the support. So if it goes to the top, goes outside the top, good time to sell covered calls, sell call credit spreads. Bottom, best time to sell put credit spreads or sell cash secured puts. You don't have to do that, but if you want to, it's a good thing to do, or you want to trade like weekly, I would do that. So whenever that chart looking good, most of the time I'll have the chart up and do the actual trade on my phone just because I like the app better. But if you go trade Palantir options, by the way, you don't need level 3 options to do this. But if you want to do credit spreads, which most people probably will be doing because they don't have 25K or, however much they need to do a margin account. So this is what you do. Sell put. Expiring, I recommend 45 days for most people. I've been doing weekly just because I think it's a little bit more fun for me right now. I just want to get better at it. So you'll go down here. You'll go to a nice delta of like a 25 delta, which is pretty much the probability that this trade is going to win. So this is a 23 delta. That means you have a 77% chance that this trade is going to go through. And if it doesn't go through, you're going to buy Palantir for 114, and your break-even price would probably be like 105 or something. Because you just subtract the premium from it. The premium is over here, so you get that immediately. So every contract you buy, which is 100 shares of Palantir, you need to have that money set aside to be able to purchase it if it gets to that point. So what you would do is sell a contract for this price. Click this. That's what you want to do. Continue. Break-even price, okay, my bad, 109. But remember, the stock's at 129. And this is 45. 45 days is the best. And then you execute around day 21. Or the option cuts in half. So now right now it's worth $4.15. So in 2, 3, 4 days, it goes down to $2.05. You'd buy it all back and then get your profit, right? So you buy a contract. Bid ask spread is 10 cents, which is really good. You could go for guaranteed or 4.2, which is $4.20. But remember, it's an option. So you times it by 100 because you're going to buy 100 shares. Okay. So very, very simple. And then you review the order, and then whenever it's done, look, you are agreeing to buy 100 shares of Palantir at 114 on or before June 27th. If you aren't asked to buy Palantir by then, you'll keep the collateral and full $415 credit. So what that is saying is the collateral is $11,400. That means you need that amount of money to be able to do this trade. If you don't have that, you can do what's called a credit spread. But the best thing about this is it's like a win-win either way. Either I get Palantir at 114, which after the premium, you get all of that right now. $414 goes right into my account. And if I don't do anything for the next 44 days, I will either buy it, or my average price, including the premium, will be $109, which is $20 cheaper than what it's at now, or it'll expire above $114. I'll keep $414, and I get my money back. And then you repeat. Pretty dang simple. I have only been assigned on 3 stocks: SoFi, Marvel, and Nvidia. Nvidia's already back up, and I'm over what I bought it for. And the other SoFi is too. So I covered calls on it now, so those are about to be done for good. And it's just the wheel strategy. You just run it over and over and over again. It's very, very simple. But let's say I have $5,000 or $10,000 in my account. What would I do then? So you can do the same. 44 days. That's what I recommend. Execute it around day 21 or at 50%. So you go to sell put, and then you go to buy put. This is what's called a put credit spread. So this has defined risk, meaning you either win it all or you lose it all. As in, the max you can make is 125. The max you can lose is 375. So you want it to stay above 115 because if it doesn't, you're going to lose it all. Whereas at the other one, if it gets executed at 114, I have to buy those shares. I just keep Palantir, and we hold it and sell it for above 114, ideally, like 115, 116, 117, 118, whatever. So this is a put credit spread. You really want no more than a 3-to-1, which this is right out of 3-to-1, so this would be a good trade. So you have to have a minimum 375. So let's say I had $5K a month. I would be willing to put myself a quarter to a fifth of that down. So you could buy, 4 contracts of this and make $520 in 45 days. Or, you can make 50% in 5 days or something if it keeps going up. So it just depends what you're comfortable with. Obviously, the more money you have, the more you can make. It's better to have a huge lump sum. I started with when I was in the military, $0. I've been investing since I was pretty much since I was 19. And $100 a month. I'll do TSP and stuff. TSP is a 401k, but the most you can make, the most I made with my TSP was $5K over a span of 8 years, which I make that monthly now. And selling options is kind of a big lump sum of money action, whereas buying them is more of or selling credit spreads is just a smaller account, but you can do that and grow exponentially. I mean, I'm on track to like probably 50% return this year total. We'll see. I mean, that's my, let's see, year to date is 5%. Because it went down, it went up. See, whenever the stock market crashed, it went way down. So, I've been winning regardless of the volatility that's been going on. That's pretty much what I do. I'm just going to start making little videos of this here and there because a lot of people ask me questions like, hey, what are you doing? How do you do it? This is a very, very simple explanation of how you do this. I'm going to go more in depth with time, but I just thought I had some time to make this. So, yeah, that's it. Thanks for watching the video, and y'all have a good rest of your day.